Wow. Good day, everybody. Ira Epstein, and here we are with your financial market wrap up this last day of November 30th, 2022. We're getting on about 6:50 p.m. Central Time. You know, I have a philosophy because, as you know, I call myself the Swiss cheese guy because I've done everything wrong in my career at some point. I really have. I mean, as a trader and a market analyst trying to learn, I made so many mistakes. But first, you know, I wrote books on this, The Psychology of the Smart Trader. You might want to go look it up on Amazon and some of the other areas. It's still out there. And I think our first run, we sold 5,000 to Forbes or somebody like that. And it was about the difference between winners and losers. Why are the pros winning? The ones that I interviewed, and I did interviews. And then we did interviews with another person, a good friend of mine, Dr. Garfield, famous interviewer, man that studies human psychology. We put this together. It took us about 2 years to write it together. And you learn. And you know what I learned doing this? You look inside yourself. The one thing I learned is you get into a major report, you don't know two things. Number one, what's it going to say? And number two, what's the reaction to it? You can tell people what the report's going to say. How many times have you got it wrong? You go, I don't know why the market didn't react to it this way. What I learned is why figure that out? Step back. There's always another airplane. That's why there's a schedule, a train, a bus, Uber. If you didn't get that one, you're going to get another one. I mean, this is how it works. So what I learned a long time ago is trading as difficult as it is. Why make my life harder? And there are times I tell my clientele, my paid subscribers, to back away from markets. And I had no positions coming in today, and I'm the happiest camper. You'll say, well, look what you missed. You're right. But what if I had been wrong? Because reports, you can have a short or a long position, and it can change the game on you like that. I mean, you had a 700-point rally in the Dow today. You took the market, whether you know it or not, from, if you go back to the most recent low, you're over 20% over, and you'll say, well, that's the end of the bear market. And according to the theorist, it is. Except it's happened 3 times this year or so, and the market each time has gone down and made a lower and low in the end. So this stuff's all good to know, it's all good to watch, but the heck. I'm interested in not where there's going to be a report out that suddenly the charts go crazy and I get my butt handed to me. This is a game of survival. This is about the last guy standing, not the first guy to roll the dice. I won and I'm out of it, because you're going to roll it again and again. That's how Vegas is built. Got to know when to walk from the table, go have dinner, go watch a movie, go take in a show. Same thing with what's going on. Let me show you something as to what I'm talking about. And I want to come over, not to that, I want to come here. Tomorrow, these are all the reports coming out in the morning. They'll be done by 9 in the morning or so, 9:30 at the latest. You think that's going to be easy to go through? You got the PCE. As we know, the Fed loves that report. Fed chair was talking about it today at 12:30. You've got jobless claims coming out, Challenger Gray, everything the Fed's looking at in numbers. They didn't get what they wanted out of the JOLTS number today. That JOLTS number is staying strong. There's still 1.7 offers for each job. I mean, come on, for each person. That's an awful lot. You have a strong labor market that's not going away. Then you get a series of PMIs. You get 2 Fed members speaking tomorrow. There's a lot going on. And before we get into the next part, I want to show you this part of it. I want to remind you that we have our Cyber Week sale going on right now. It ends this week. Game's over. I am going to be raising the price. I was going to do it first of the year. I'm not going to. I'm raising the price of my charting course, my Bollinger Band, and I think next week we'll have this course out, the Outside Day. I should be able to finish it up tomorrow. Tomorrow and Friday should finish the course completely. Then I'll give it to my IT department. They have to compile it. It's all rendered and everything. They'll put it together and we'll have it out to people that want to get it probably sometime next week. My courses are too inexpensive. I look at what other people are putting in the quality. They don't touch them. So I've decided it's time. I haven't raised the price of my Bollinger Band course since I put it out 1.5 years, 2 years ago. I'm going to take it up a nice amount. This new course is certainly going up in my original charting course. So this is your advantage to get all these free. You pick which one of the three. By the way, it's also your chance to go out and buy them right now before I raise the price, because it's going to be the same course, but the price is going up. All it takes is a free, to get these, 1-year subscription to any of my research, and I have not raised the price of the research, but this is definitely going up, and you have that opportunity staring you in the face right now. How do you do it? Just move your cursor to the top. You'll see an icon. Give it a click and go. When this ends, that's it. I don't want to hear from you while I was going to do it. I get this all the time. Do it. It's that simple. It takes little effort and not expensive. By the way, it'll then these courses probably will have paid for your subscription for the year. Very close to it, or cut into it nicely. One of those. If you have questions, you can call my staff. I just made this decision. They don't even know about it. Okay, so let's go back, if we could, to the chart action today and talk about all this. What did the Fed do? The Fed chair came out and he alluded, he didn't say, that the timing might be right for the Fed to not put out as high of interest rate hike, singular, as it's been doing. It's given you 475 basis point hikes. Code word, they might move down to the 50-point one. Code word, he didn't like the JOLTS report. If the JOLTS was strong, the odds favor that the jobs data report's not going to be super weak. We don't know that for sure, but we get that. Then we get CPI, and the Fed goes into the quiet period because you get before the next FOMC meeting. Remember, they go into their quiet zone. So you've heard what the Fed chair said. What else did he say? Moderating is not stopping rate hikes. He didn't know, he admitted that, said it. He doesn't know how high interest rates have to go before the full effect of the lag kicks in and other parts of the market start slowing down. So instead of 75-point hikes, he's alluding to 50-point ones. If you get a monster jobs report Friday and you get strong CPI next week, you can forget that. The 75 will be back on. But let's assume they're not that strong. You get a 50 probably, and then maybe if the lag effect's working and numbers are falling, even wobbling as you are in the jobs, in the JOLTS, 25 and 50-point numbers back and forth, or even 25s. But how long? What's the terminal number they're going to get up to? They don't know. Another thing he said that the market got wrong. When the rates get to where they think they can stop them, they're going to keep them there longer than you think. They want to lock in and make sure that that inflation is falling. And again, he said, you can't get out of this too soon. So if you think that's super bullish for these markets, that you're going to take current rates from 3.75 to maybe 5, 5.5, whatever it's going to be, and keep it there for a while, you're coming from a different level than I am. Fundamentally, I think that's going to hurt the markets. Does that mean you're super bearish? No. Why? Because the markets will realize that while the Fed may keep it there, they want to be ahead of the point where the Fed starts turning it off. And that's going to be this constant back and forth, which gives trading opportunities galore. You don't have to be there at the bottom. And you don't want to be there on each one of these rallies buying up here thinking it's going to the moon when each time it's punished you. I'll let you decide the rest, but that's the school I'm coming from. So as I'm looking at what's going on, gee, I'm so sorry I left that on, but I'm not going to repeat all this. So we'll just leave that on and just the cursor that I didn't move. You're over the 18-week moving average. The bias is up. As you can see, the market is trying to come out of that sideways action that it had. Is it going to be a false breakout or not? The next couple of days are going to tell us that. The pattern is one of higher lows, higher highs, bullish. You went up today to the 200-day moving average. You're able to close over it. You generally have trouble at that number. You did this before. I think you're going to have trouble right here. And reading that number right above it's going to be the Bollinger Band. So in a nutshell, I think this zone is going to give the market fits right away. We'll see if I'm right or wrong. Are we going to re-embed? Well, what's re-embedding mean? You got to get the numbers to stay over 80. So what happened here is you lost the embedded reading on Tuesday at the close of business. Prior to that, you had, with the embedded reading, they were all in place. I'm not going to teach you how to do this. Suffice to say, it re-embedded today. My experience has been that's bullish still. You could go up to the Bollinger Band, but if it loses the re-embedding again, the odds are extremely strong you'll be back at that 18-day average lickety split. When I look at the micro mini NASDAQ, you're back into key resistance. Back up here, number one, overbought. Number two, back to the 100-day average, and between that and the upper Bollinger Band, the resistance. The markets, all of them, came down to their 18-day average and they held them. That was the support zone on each one of these. You can see it. I call that the line in the sand. You hear me say that all the time. Just like in the S&P, you had lost the embedded reading right here, and you got it right back the next day, which is today. So, head fake. I'm upset because I had clients long the market. I took a loss, and today would have been the winner. Let me tell you what I've learned with that. So what? If you fight that and you wait for the day after, I have learned you get annihilated. So for the few times that can happen, just the way it is. The world isn't perfect. Do I think the market's going to have resistance now up at the upper Bollinger Band? Well, what do you think I'm going to say? Of course you know I'm going to say that. But it's embedded. Until that's lost, I'm bullish these markets until you lose the embedded reading again. You just got to forget that happened to you. It's the way it is. In the Russell, back and forth action sideways. But again, where are you fighting? The 18-day average of closes. So now we come into the VIX, and one of the things that had bugged me the whole time in the VIX was the VIX wasn't getting a big rally here, and it had an embedded reading. If you and I step back on this, and I'll show you, let's get back if we can. One day, will it let me do this? I don't know if it's going. I'm going to come back and forth. Sometimes that allows it to do it. There we go. All right. You closed at 2085. That's not over 21. It kept its bearish embedded reading, and today it paid back in spades. I wish for the guys that were with me on the in the Dow, it had closed at 79.05 or something like that. It didn't. This is what I was hoping would happen. Okay, you're still embedded. Until this loses that, you have to have a bullish tone to the stock indices. When you look at the bond markets, you're still with an embedded reading. And as I have said, each time you get that, on the breaks, the pros are buying. They'll kick out, ideally up if they can get that high. There's window envelopes that I don't show here, so there's other profit objectives until you lose that red number under 79. You're getting the same here. So all of these are saying to you still that interest rates are doing what? Interest rates are still under pressure. The real yield falling a little bit. Got to go to the 5-year to see a different picture. In the dollar index, you had lost the embedded reading, past tense. Let's go to it. Now, when this occurs, and it occurred right over here, you're looking for the 18-day average of closes to occur. He went right to it today and boom, back down. So it's not re-embedded, but it hit its objective. It's staying under pressure. Well, if the dollar's staying under pressure, commodities priced in dollars are going to stay under pressure. Keep that in the back of your mind. And the euro just missed. It got so close, I'll consider that hitting it. Come on. I mean, you're just right there. That was the objective when you lost the embedded reading. I can live with that. 4 or 5 points, it's not a big deal. 10 points, you're in the zone. I think it'll have resistance up here, and it is not a buy. It is overbought. A lot of resistance at the 200-day average. Please pay attention to that. In the British pound, you've maintained the bullish embedded reading. Still looks to me like it wants to work itself higher. And in Bitcoin, did I not say it when you started right here, losing this reading? So it's probably going back to the 18-day average. Again, the enhanced Bollinger Band course. But remember, you got to get your numbers to match mine. Your slow stochastics will not match mine. I will give you the formula when you're a paid subscriber so you can work with it. And you can create it, you can write it in most charting software and modify the one that you have. It's pretty simple. I give you the whole formula. In the Brent versus WTI crude, you can see how the market's still falling. I wouldn't give you 2 cents for this. They have their hands full trying to figure out what to do now. And I'm talking about OPEC plus. U.S. production went up to the best number it's been since the pandemic hit. Yes, our numbers are climbing. Okay, are the manufacturers of the oil, the drillers, really listening to President Biden? I don't know. We got to give some credit. He called for them to do it, and the numbers don't lie, so they're coming back up. Tonight, the new number of the cap that hasn't been accepted yet within the European Commission, not union, the Commission decides this between the members, they got to get everybody on board, is $60 a barrel. At the same time, Russia keeps reiterating, any country that puts a cap on their oil, they will stop selling oil too. Then at the same time, China is starting to say the strain of the COVID isn't as bad as first thought. This is the head of all their national sciences. They're like our Dr. Fauci there. Unfortunately, she's going to be retiring come year end, but this is what she's now saying. So with that, Guangzhou, they started releasing there some of the restrictions. Do you think it coincides with the demonstrations on the street? Of course it does. But you save face in China. And nothing's a light switch. Everything's slow, thought out, done a different way. But it's happening. And what will that do for the demand on the oil? All right? But of course, they have one big supplier, don't they? Not the Saudis. Who is it? Russia. And Russia's got to sell to them and to the other people at big discounts. So I don't think you have to worry about the price cap. It's going to put even more pressure on Russia to just stay in bed with India, the other traders of China, Korea maybe. You play with them. But these people know how to take advantage of the discount. They'll do their damage to Russia. In the WTI crude, is the market going to get a bounce out of here? That's the big question. It's been bearish. I don't think I'd want any position going into the OPEC meeting. It's going to take place this weekend, so please be careful. It can go either which way. You can see the resistance points are all the 18-day average of closes. Even that gas as it's falling, support's right under the market. Pay attention to all that. Last, take advantage of the sale that we have going on. You're not going to have it again. So just move your cursor to the very top here, take advantage. You can give a course away. You can take it for yourself. You can either buy a subscription for a friend, keep the course for yourself. Any way you want to do it, we'll work with you. I'm Ira Epstein. You have a great day. I can't wait for tomorrow. There's going to be a lot of action. Take care.